This is Christian from Strategic Trade Group, and this is your end of day market recap for Wednesday, February 11th. Well, today was another interesting one for you. So I will go over all of today's moves. We'll talk about what worked, what didn't, and what's going on in this market. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So what did we learn today? Well, we got a jobs report that came in. The market initially liked the jobs report. We had small caps that gained almost 1% pre-market. They were leading. And then things began to kind of like, once the market opened, there was a lot of sellers, once again, who were taking advantage of the gap up, and you had another gap up and fade. So another one of those traps. I wish I would get more aggressive with selling these gap ups. That would really work. That has really worked in this market. I think what you're seeing too is a couple different things. With the first of all, like a gap up just entices sellers to say, "Hey, I'm going to take profits into this move." And I think also something that we heard a lot. There was a few different notes by Bloomberg. Over the weekend, Goldman had a note out, and they're talking about the CTAs, who are, what is that, is it technical advisors? I forget what CTA stand for, but they have models, and basically what they're doing is whenever their model says they get a technical signal, they're either buying or selling or staying put. What everybody kind of came to the conclusion is that under any scenario, those CTAs would be selling. And I think that's why that you're not seeing too much advancement in the overall market. It just feels like whenever this market starts to drift up, there's some selling pressure there. And I think that's a product of over positioning in this market. So things that we know is that the last read of leverage that we've gotten about retail investors is that they're over the tips of their skis with margin balances. It's record margin balances. And then every time that Bank of America Fund Manager survey comes out, it says that cash balances in their in their respective funds are at an all-time low. Hence, you have some selling going on into some strength. Now, a couple of things that I said yesterday with the price action, and let me just switch over to the charts here, and we'll talk a little bit about that. Because I think that helps illustrate what's going on here. But I said this level in yesterday's video. I said watch 695, 2027. So again, we're getting to these levels, and we're getting rejected. So very simply, like, I know folks always want to have a reason for things, but it really just is, there's more aggressive selling than there is new buyers that are coming into this market. And that's mainly it. And especially again with gap ups. Gap ups a lot of times they're meant to be sold into. So if you came long into today, and that's not for everything, I'll go over some of the areas that really worked. We're just talking about on average because we're talking about the S&P 500. But again, that's the level to pay attention to, is this 695.27. If we get above the value area for the month, then we're in price discovery, right? We are now trending, and we're onto new ground. And at this time, there's sellers that are preventing us from doing that. Qs are a different looking picture, but not such a good picture, because they can't. Once this breakdown that we saw in the Qs, we're now pushing up into resistance 617.76. And either you kind of have to model out your scenarios here. There's a couple things going on here. Either we're going to get rejected and we're going to drift back lower and maybe do a double bottom in here, or high or low, something like that. Or we're going to break into this value area. And something tells me more it's the former, because we're butting up against this level and we really just can't get there. Right? And also when you look at the 1 hour charts, you're going to see this too. And that's why I look at 1 hour charts, is sometimes you can just kind of see things from a little bit different perspective. But notice, like, every time that we try to drift higher, right? When you see these long wicks on these candles, it means like someone's preventing the market from going higher. Who's preventing that? Sellers. Once it looks like we're going to turn, every time that we look like we're going to turn, it gets squashed or held down. So again, right now we kind of have to clean up some sellers probably in this market. We probably have to get that CTA selling out of this market. And the issue is that they can win out. They can win out and they can start to move the if some selling starts more selling, then we can possibly come down here to the bottom of the value area, which is down 2.87. So if you're worried about that, pick up some Q's puts. Right? That's a very easy solution. If you're worried about that, if failing down here, puts are not that expensive. That's an easy way to do it. Right? And here's what SPY looks like too. It's kind of a little bit similar. We keep butting up against that top of the value area for the month. Not going to do it. Not going to do it. Not going to do it. And right now we're kind of we're going sideways for now. So again, we could definitely kind of fall down here, and that would be 687.15. So probably like, Christian, why are you talking about the downside so much? Well, as traders, that's what we have to protect ourselves against, right? If you're positioned more long, right, just like Paul Tudor Jones used to say, every day I come in and I look at my position, I assume that all my positions are wrong that I have on, right? He's worried about the downside, right? And it's the same thing. Should be worried about the downside, right? Make sure that you're covered for that stuff. Make sure that you're watching your support levels. And if those don't break, then maybe we can resolve and go to the higher side, right? That's what it's all about. Couple things from yesterday. I had thought I had mentioned that a lot of the market leaders kind of just took a break yesterday. If we go back to our spreadsheet here for just a second, I think I was pretty spot on with that assumption. Because if you look at what outperformed today in the tech space, once again, it's the semis. They were up 2.5% today, and we got some good earnings reports from a couple of, not every name was good. Astera Labs, which I know is a very popular retail name, fell like 20% today. Did that phase the overall semiconductors? No, because a lot of the names that retail is not looking at just continues to go higher. Teradyne, not Astera, Applied Materials, Lam Research. Right? These are strong, these are strong groups and the memory names. So we're going to look at a couple of those charts in just a second. Also, the metal space and the energy space doing very well. Look at, oil services took a break yesterday and was one of the worst sectors yesterday. But again, it's just digestion in an uptrend. And energy was up 2.6% today. Right? So again, the way that I'm kind of thinking about this is these areas are not overcrowded. That's why they're still going up. Right? There's just not a lot of assets in these things. There's many more assets in the Mag 7 names, in the software names. They're still overcrowded. Now, there's some other problem areas too. I keep seeing aerospace and defense on the bottom of this list too. And I have this in the TTG global trend portfolio, and it may have just had its last day in that because I may be taking it out. So I'm talking a lot about these things, but I want to give you a couple examples too, which I'll go through. But let me go back to let's talk about some of these areas that are excelling, and then we'll go from there. So the semis, number one, right? Did not make a new high today, and that's something that we're going to have to pay attention to, is whether or not they stall out here or that they can continue. But for now, this is by far the strongest area in tech. And to me, it makes some intuitive sense, right? I know I've been talking a lot about this, but I'm not a fan of any of the Mag 7 names, all the ones that are increasing their capex. But I'm a fan of where they're going to be putting their money. Right. And that's into the semiconductors. That's into, the names that are going to have to power generate. And again, being selective in that group. VRT had a huge earnings report today. Right. So that goes on our strong earnings list. Right. That's a name that was holding in pretty well and just broke higher before earnings. But there's a lot of stuff like this that is going up and that's doing very well. SOSL. Also, look at this one. Right? So there's a lot of really good, I must have put on about 10 names into the TTG strong earnings gap list. Right? Those are names that we're going to want to pay attention to. I kind of think that this might be a runner. So I would pay attention to this SOLS. If you don't know what this name does, Soltis Advanced Materials operates as an advanced materials company. The company provides refrigerants, semiconductor materials, protective fibers, blowing agents, I don't know what that means, solvents and aerosol and healthcare packaging solutions. All right, so that's Soltis Advanced Materials. No, newer name, and I think that's very interesting. And I think you're getting a few other names that are doing that. Let me just go to my earnings strength list. Just bear with me 1 second. What else did I see that was very strong today? Generac. Um, I mentioned Teradyne earlier in this. Look at Teradyne continues to. So why does a name do this, guys? So I'm going to talk about the good and the bad, right? Why does a name continue to get to gravitate higher like this? The reason why it does is because a strong earnings report catches people off guard. When I say people, it's funds who don't have a position in this, and they're like, "Hey, I listened to the earnings call in Teradyne. They're crushing it, right? And this business isn't going away. So I'm going to start accumulating this thing up, and continue to have to do it. And that's why this name is still running. That's what you get out of. That's why earnings season is so important for those names that are are not crowded. There's going to be really good trading opportunities like this. Now, what's going on, the other group, which I did not want to get, did not want to chase, did not want to do anything yesterday, was the bounce that we've seen in software names. Now, this is leaning lower. Now I would watch this 5-day moving average and see if it actually try to stay above here. But I do not think that this is a healthy group here. Some of the names that reported earnings after hours are drifting lower. That I see AppLovin, I think, is lower, unless it changed, unless it flipped. Just change this. Paycom is down 7%. Yeah, AppLovin is down 4%. HubSpot is down 3.5%. So I keep getting this whenever I kind of try to help people with this. And all I'm doing, by the way, is trying to help. Right? When something breaks its trend, guys, it is not a good buy. Right? It's a very different story if something is dipping into its support, like a 20-day moving average. Often that is a very good buy. Right? The trend is intact. Buyers are defending different areas. They're adding on dips. When you have a breakdown like this, it's not a good, in my opinion, it's not a good buy, right? It means that, and we could go through some books. People need to read books. Don't use AI. Spend some time over the weekend, go into a coffee shop and read a couple books. Where's my camera? Right? Here's a good one. This is Stan Weinstein. Right? This will tell you about stages that happen. If you've heard stage 1, stage 2, stage 3, stage 4, right? You want to be owning things in stage 1 and stage 2 that are moving up. You don't want to be owning things, in my opinion, that are going to the downside. Now, again, it's not to say that this can't bounce again. That's fine. It had a bounce a couple days ago, and if you're a really fast trader, maybe you made money on that. But also, right? You could go. I have a whole bunch of books here. This is one I read when I was in college. When Genius Failed, right? These were this is a book about like the 1998 Russian debt crisis, right? Where there was very smart scientists were playing reversion to the mean trades until they blew up, right? And then we have this book, which is often like the other side of When Genius Failed. This is called Trend Following. Right? Read this book, right? And you read this book and you will not be buying stuff like this, right? It means that there is heavy, see all this stuff down here, all this volume down here, that is people selling, right? That is people getting out because something has changed here. Now, keep in mind, this is also a very expensive group, right? For a long time, software had these big multiples to it. Palantir still has a big multiple to it, right? It doesn't matter when you're in an uptrend, right? Once you break the trend, then it becomes a very big issue about valuation. So those books are very good. Also, if you're looking for more trader education, you could listen to, I'm giving him a plug. Richard Moglen interviews a lot of the U.S. investment championship traders of, who just finished this year. You go through a couple of those presentations. you will find that the most successful traders are doing very similar things. They have a little bit different type systems, but they're going after names that are going up, right? They're looking for really good setups on things that are consolidating, that have had good earnings and are moving higher. Right? It is very important. They're also, most of them are always worrying about the risk and trying not to have a drawdown. You can't be in some of these things and where they just are trending down, where there's no buyers in here. How are you not going to have a drawdown going into some of these things at this point? Right? Normally what happens is after a decline like this, things go sideways for a while and then they begin to move up. Not always, every once in a while you get a V reversal. But for the most part, things go down, then they base for a long time, and then they begin to kind of drift back up once buyers begin to accumulate again. Remember, you are not going to be able to control a stock. It's the institutions. The institutions have to start buying. Um, One other example that I wanted to give you too, because just to kind of help, and then I'll go through some other charts. But I went through this, and again, I think this is going to help traders. That's why I bring this stuff up, right? Um, just bear with me 1 second. All right, this is a fund that you're familiar with, and you could learn a lot. So why I'm bringing this up again is to help you. Right, look at this particular fund. Right, this is the ARK Innovation Fund. Right, look at the performance. And if I went over this in an earlier video, I know I did this for members. I can't remember if I did this in a public video, but on every single time frame, they lose. How is that possible? They're investing in innovative companies. How is it possible that they are losing on every single time frame? Right, over 5 years, they're down 14 in a bull market. This company and what they're doing is down 14% versus the S&P up 14%. That's a difference of about 28% of underperformance, right? And I will give you the leading reason. If you go through their, and what's nice about them, and don't feel bad for them. They make billions of dollars, right? They have billions of dollars under assets. People believe in them. So don't feel bad for them, right? Because they're making a lot of money. But they put out an end of day file, right? Go through and watch what they're buying. I put out 3 examples over this weekend about what they're doing, where they're buying, right? And I'm not going to go through all those examples, but it's very simple, guys. They're buying names. They're doing exactly what I said not to do, right? They, let me switch here. Oh, sorry. All right, here's one example. TEM, right? They're buying it as it's breaking down. Now, who knows? I say who knows because I don't know what they're going to do on earnings. They have earnings in a couple of weeks, but they also did the same thing in Robinhood, right? They were buying as it starts to break down, as the stock is breaking down. So you look at their examples over time. So why I'm bringing this up is because if you think these things are good buys, look at what the ARK Innovation Fund does and look at their performance over 5 years. They've been doing that game now since they started that fund. And I'll tell you, that fund is severely underperforming because they're buying names that people that you may, if you're not familiar with technical analysis, you're coming out and you're saying, "Oh, this stock went down 20%. It's cheap." It's not cheap because it's being sold by institutions, which often means it's going to go lower. Hence, their fund always underperforms, right? And again, there's no way for me to give you a better example than looking at any time frame since ARK has existed, and they don't change. I don't know why they don't employ somebody with just a basic understanding of technical analysis, but that's the story. Okay, so that's, sorry to go into detail about that, but I really think these things are going to define whether or not you're a profitable trader or not. Micron. So talking about buying a really great name right now, we know that there's a problem with memory chips. They can't get them. They can't find them, right? There's shortage all over the place, right? So I don't know when that trend is going to stop, but I will tell you, right? So that's probably like a good, that's one of the number one questions I get. Well, Christian, I can't buy the stock up here. What if people start selling and it breaks down? You have a stop price. No one knows how long a trend is going to last. We just got another dip in this name, right? It dipped just below the 20-day moving average and it recaptured it. Here's your buy signal, right? Same thing with SanDisk, which I got long today. Been waiting for this to turn. It got a little bit too hot here, right? And it got extended here, which a lot of names are going to do because of the runs that they have lately. But look at it pull back right into support. So yes, is this eventually going to break lower? Yes, but we don't know when that's going to happen. This could continue up to $800. It could continue up to $1,000. No idea, but that's why you have you have a risk framework in everything that you're doing. Take a look at, speaking of memory names, right? Look at, this is EWY. This is the South Korea ETF, one of the best country ETFs performers last year. You probably said, "Oh, I missed it," right? What did you miss? Right? You got to think about where it's going, not where it's been. Right? Look at this nice consolidation for about 3 weeks, maybe 2 weeks. Right? Now it's breaking higher again. Whip up here, unless something changes. Right? So you should be more afraid of things like IGV than this, as long as you have a stop price. Where do you put your stop price? Put your stop price down 2-5%, whatever you're comfortable with. And that's also something that you have to get comfortable with as a trader. If you cannot pull the trigger on saying, hey, this setup didn't work and I'm getting out of it, right? That is one of the number one things that, or top things that hurt traders, and why it's so difficult to make it as a trader is because you don't follow rules and you have to set up the rules ahead of time. So that's just a couple of thoughts for today. So I like what the semiconductors are doing, but yeah, just as I said in the beginning of this video, you always have to think about what could go wrong, right? You can't be scared all the time, but you got to think about, like, okay, going back to the semi chart, right? I don't want to see this get rejected over here and start to head back down. A couple other charts that I'm a little bit worried about right now is biotech. Now, biotech held in there, right? Watch this 50-day moving average. So here's another thing, right? I'm long this in the TTG global trend portfolio. Am I worried about this? Yes, because it's teetering about breaking the 50-day moving average, right? And here's where, this trend has been going on for a long time, where biotech has acted really well, but it needs to pick it up here. And if it doesn't turn here, and if it breaks this 121 level, I'm out, right? But it didn't do it yet, right? So again, if that happens, it's about 2.7%, maybe 3% down. That's where my stop is, and you have to be comfortable with that. I don't know if this trend is going to continue. I'd like it to stop doing this stuff and start to get away from that 50-day moving average, but that's something that we're going to have to pay attention to. KBE is another thing. I didn't like the candle today, but it's also a bit extended, right? It could let it see if it comes down to the 20, and let's see what it does if it revisits that 20-day moving average. It could be a buying opportunity. The small caps worry me a little bit, right? It kind of looks like that semi chart, right? It tried to get up to those highs and a little bit of a rejection there. Still, oops, that is that's why it looks like the semiconductor chart, because it was the semiconductor chart. Here's IWM, right? It made a little bit of a lower high today, right? So remember that we had this reversal bar, ugly looking candle right in here. How long is this video? Oh, the video is 23 minutes. So in any event, I could talk charts for another 20 minutes, but I won't do that because the video will be too long. But yeah, we had this reversal looking candle here. We corrected. We came back up, but if we don't make a new high here, it could be trouble. Making a lower high is not something that we want to see. Very constructive in the charts. Another chart that I'm watching very closely is the XME metals and mining. You got a little bit of a decision area here. Again, one of the strongest trends over the last couple of years, corrected with that silver and some of the other commodity sell-off. It's trying to get back above, but like I said previously, and I said this, and this is for members, I go over this in detail, that these candles need to kind of slow down a little bit, right? When this thing was going up, look at the size of the candles, right? Those are accumulation candles. Now they're too erratic. So the moves have to kind of slow down a little bit. We don't want to see these huge red candles anymore, right? The candles need to get smaller, right? And then that would show that more that that it's being accumulated again. But I think that's a must-watch area. I'm still long some Alcoa, which I was able to take a target in. I did get rid of my Dow trade today. It hit the VPOC up here. Right. So again, plenty of things that are moving up pretty nicely. And again, I'm continuing to avoid the Mag 7 names. Guys, have a great night.